works for Clinton, by the way.
He does.
And he loves it. He loves his job. He was telling me off air how much he loves it while you were in the other room.
Oh, that's awesome.
Yeah, isn't that right, Blair?
Yeah, love it, and love helping clients.
There you go. So we are asking, or our fine production team went out and got some great questions, and sound great, by the way. Great job, guys. And we played this question before the break, but for those of you just tuning in, let's re-hit it, and then we'll have you two experts answer the question.
Love it.
I think the question would just be about how the interest rate goes up. I mean, if I'm planning for a mortgage, that payment to be, let's say, $1,800 a month or $2,000 a month in 15 years, will that go up a lot? Will that go up to $3,000, $4,000? Could it go down? Just if they could give me any insight on how quickly it could grow or how quickly, even if it could, decline.
By and large, people's mortgage payments are usually relatively stable. It's made up of a portion of the interest and principal. Obviously, we know the interest rates change. 5 years ago, people were getting mortgages maybe sub 2%. Now they're in the 4% range. But only a percentage of the actual payment is interest. So by and large, most mortgages are about 25 years and the payments stay around the same. I'm going to say around for that 25-year period. As the mortgage gets paid down, you're still making that same payment, but more of your payment goes on principal and less goes on interest. Blair, what do you tell people when they come in about affordability?
Yeah, when it comes to affordability, payment shock was in the news when rates were going up. What people might not realize is that they're actually qualifying at a higher rate, at 2% higher
the
than
stress test.
Yeah. So even if their rate does go up, it's already built in that they can handle that extra payment. So, people do worry about payments going up. What's your payment going to be in the future when you renew? But by and large, it's already kind of, worked in that you can't afford any kind of payment increase.
Well, and thank goodness for the stress test. I know, Todd, we talk so much about the stress test, but thank goodness for it because that's preventing this renewal cliff. I won't tell you it's not without pain because sometimes people are like, oh, I can qualify for more. We're protecting you from yourself, first off. Yeah. And these ones coming up for renewal, a lot of these clients are in tough shape because they changed their financial position. They bought cars, they did renovations. Yes, the rates are higher, et cetera, et cetera.
Yeah, let's rewind the clock back. We were doing these shows 4 years ago, 5 years ago, when interest rates were almost zero, if not zero. And you were emphasizing at that point, listen, folks, the stress test is necessary and it could pay off, and you were prophetic because it has.
Thank goodness. Yeah. Thank goodness. Now, I think the federal government will likely do something and maybe remove the stress test, but there will be another barrier to entry.
Why do you say that?
Because I think they might change it. You never know.
Yeah.
I don't know if the stress test is outdated per se. Right now, we qualify people on contract plus 2%, or a qualifying rate of 5.25, whichever is higher. It's always the contract plus 2 right now because the rates are so high. But will they change it? I don't know. They're talking about making an income qualifier, like you can only qualify for 4x, 5x, whatever, 4.5x your income, and take out the stress test. But we'll see if that actually comes to fruition.
Blair, is it sometimes a difficult conversation to explain that to people, the stress test, or is it something that is pretty clear?
For the most part, people don't know that it is happening in the background or that we're adding that 2%. They just give us their income documents. We let them know how much they can qualify for. They're more concerned about, getting the house and, making the payments.
And what the payment is.
Yes, exactly.
But do you have that conversation with them that the stress test is part of this, or sometimes do you not?
Savvy clients will sometimes want to know what's happening in the background and why they're getting that affordability number.
It's not obligatory to tell them about the stress test then, is that correct?
No, not at all.
I don't have the conversation with everyone because it's above a lot of borrowers' heads.
Okay.
And it also creates, I think, a lot of anxiety to be like, oh, I'm going through another testing
Yeah, the term
stage.
Test might not be the right way of putting it.
Especially when we have a conventional borrower, they're being approved by the bank. There is no other one in between us and the bank giving an approval. Yeah. When we have a high ratio borrower, there's multiple parties involved. There's us, there's the lender, and there's also the insurer. So multiple parties are getting involved in your approval process to be able to actually grant you that mortgage. So, for us, some borrowers will come in and actually ask us because people are listening to Mortgage 101, believe it or not. And people are reading our blog posts or hearing us on podcasts, and they're becoming more educated to be like, okay, I have to go through the stress test. What does that look like? Okay, that's not something for you to worry about. It's something for me to worry about. Can I get you approved? And the way that I approach it oftentimes is I tell people what the maximum I can get them approved for, and I also tell them what the maximum they can be approved for and not eat craft dinner.
There you go. We should hit another question.
Mic drop. Next question.
Yes, next question, guys, please.
Yeah, I think like I guess I would ask just like what the best moves as like a new homeowner, things that I could do to improve my situation, maybe getting the best value for my home, maybe keeping my home as something for my grandchildren or other family members and be able to pass that down, because that's something I may not necessarily think of initially, but down the line, see the value of that.
Blair, go ahead.
Yeah, for sure. Like one thing you're going to want to consider is the cost of the upkeep of the home. Mm-hmm. So along with, saving for retirement, you're going to want to save part of your income for a new roof, for landscaping, things to keep the house marketable. And that will, help you out in the future. And if you do want to pass on that home or build future wealth, keeping up with that upkeep on your home is very, very important.
You 100% have to protect the envelope. As you know, Todd, like I've owned multiple homes, you have too.
Yep.
Very, very important. I think the one thing that really rings true to me when I talk to new homeowners is keep a good relationship with your mortgage broker, because we're not one and done. And I think that's a lot different from a realtor. Like when you're buying a home, you're doing the transaction. Once you own the home, you don't really talk to the realtor again unless you're doing another transaction. But let me tell you, these mortgages are coming up for renewal a lot faster than you think they come up for renewal. And a lot of customers we talk to midterm. We do midterm refinances. We do midterm transfers. They renovate their home. They need to pull equity out. They get divorced. They're buying another property. We're sometimes talking to our customers. We reach out to them at least once a year to do an annual review. Yeah. But sometimes we're talking to customers multiple times throughout the year, just depending on what their situation is.
Your marketing material, which you put a lot of money into, and look fantastic, by the way.
Have a good relationship with a mortgage professional that you're going to trust, and stay in that relationship with them for 25 years. Will they always be the lowest and the cheapest rate? The cheapest isn't always best.
Right.
But having a relationship with someone, I think, is more important than 5 or 10 basis points in terms of a rate.
Absolutely.
Do business with people that you're going to trust and for people that are going to have your back, and be in a relationship with them for a long time.
Good stuff. Any other questions, guys? 2 more questions.
Oh, 2 more. Okay. Hit me with your next one.
Okay. If you're looking to renew your mortgage in the next year or so, would you go variable mortgage or would you go fixed rate mortgage, and why?
Ooh,
I love it. Spicy.
I know where Clinton goes on this one.
Spicy. Yeah. I love it. Let me tell you.
Yeah.
Historically, consumers want to do a 5-year fixed. Right now, I would say the least consumers are doing a 5-year fixed. Clients today, they want a variable rate or they want a 3-year fixed. Obviously, different people have different risk appetites. For me, my personal mortgage isn't a variable. So if anybody's curious, I'm riding that wave, and guess what? My rate today on my variables, my variable mortgage, is lower than any fixed rate you can get. So guess what? I made a good decision. Did I have to weather the storm? Of course. But it wasn't a very long storm, guys. What was it? 18 months, 24 months of the rates being high. And fixed rates have really plateaued. But I think overall rates will come down. So I think it's a risk tolerance between a variable and a 3-year fixed. If you really, really, really want fixed, let's do a 3-year.
Blair, how about you? Have you had many of your clients asking about jumping from a variable to a fixed?
Yeah, when it comes for rates, essentially we get people calling in all the time, rate shopping. And those people that were calling in 12 months ago saying, what's your lowest rate? Well, they're stuck now in that fixed rate at 4.8, maybe 5%.
Some of them are at 6%, let's be honest.
Yeah. Rather than getting the right advice from a mortgage broker, and that is to take a variable rate, and it still has room to come down, I believe. And with a variable rate, you can lock into a fixed rate at any time. You're not at the mercy of the Bank of Canada. So why wouldn't you want the option of possibly floating that down? And if things, get too risky, you can lock in.
Yeah, I mean, I think it's all the upside on the variable, personally. Because right now, the variable rates and the fixed rates are pretty much the same.
There are some people, though, that just psychologically, they don't have the appetite for the variable. And that's fine.
And I think they don't have a team like us to be able to give them the feedback. Like we're sending email, SMS. I'm doing a live stream. I'm on City News every time the Bank Canada meets. Not everybody is willing to insert and like absorb that information and know that there's someone managing, their portfolio, managing their mortgage, managing their relationships. So I think that's important. Hit us with your next question.
Yeah, hit us with your best shot.
This is the last one. Okay.
Last one. Okay.
I would want to ask a mortgage expert all the risk questions, like what if my home value drops? What happens if I lose my job? Like worst case scenario stuff.
Ooh, doomsday.
Yeah, doomsday.
You know what? House prices have dropped in Ontario and they have dropped in BC.
Especially condo prices.
Yeah. Condos are 25% off in Toronto.
Yeah.
But guess what? They have just had such crazy growth over the last several years. It needed to reset. Here, though, in Halifax, the average house price, detached home, I think is hitting $700,000.
No.
Average.
Really?
Average.
That was like $475 not
I know.
long ago.
So here's the thing. It's really supply and demand, and I think it's very driven by the marketplace. So I think in Halifax, we have a lot of room still for growth, and we have more demand in the marketplace than we have supply.
Yeah. How about the job loss question?
Yeah, Blair, you take that one.
Yeah, when it comes to the risk around that, whether you're renting or you own, if you lose your job, you lose your job. So it would be better to be a homeowner and be able to have access to that equity in one way or another. The risk is still there if you're renting. It doesn't really matter.
And if you lose your job and you're not getting another job, at least you can sell your home and hopefully have a bit of a cushion. Yeah. If you're renting, like you're really SOL. And the big thing is around homeownership, just like that is with renting, you need to have a fallback position. You need to have several months probably, in terms of savings to be able to make your payments. But the nice thing is with a lot of mortgage lenders, they're very flexible. And if something actually really does happen, they will work with you to try to keep you in your home. Yeah. Obviously, if it gets dire, you need to sell it. But they will work with you to try to keep you in your home.
Yeah, I think psychologically people look at a mortgage and they see 25-year mortgage or whatever, and they see this big dollar figure. Mm-hmm. But if you were to put the same amount the same amount of rent on the other ledger that it's going to cost them, and in the end they're not going to have anything for it.
You better start saving a lot of money on top of your rent to make up for that.
But psychologically, though, that is a barrier that I think that would be a good teaching tool.
Well, when we think about a mortgage payment, it's made up of interest, which is the cost, and it's made up of principal. Principal is really going in your pocket.
Yeah.
Also, the property value goes up every month. So every month, property value goes up, in theory, at least in Halifax right now, and mortgage goes down. So you're increasing your net worth every month that goes by.
Yeah. So no housing bubble here in Halifax?
I don't see it happening for a long time. Now, I think the cost of rent's starting to soften a little bit because a lot of rental units have come on board. But I think, and I hope, some of these people, the little old ladies and the little old men, will move into some of these rental units, and then there's going to be some more homes open up for first-time home buyers. As I said, the average detached home in Halifax at $700,000. We need some houses at a lower price point to be able to get some of these first-time home buyers into the marketplace.
Blair, great having you on the show. Thanks for this.
Thanks, Blair.
Thanks, Todd.
If you've liked what you've heard and you want to learn more, feel free to visit us online at teamclinton.ca.